as we talk about the turmoil in North Africa and the Middle East and the cost to the U.S., let's talk about the cost to the defense industry. Is it good or bad? Well, my next guest says the industry's major players are paying very close attention to the events there and how they will impact the bottom line. Cai von Rumohr is Managing Director and Senior Research Analyst at Cowen Co. He has specialized in the aerospace industry for the past 4 decades, and Cai joins me now from Boston. Cai, thanks so much. Great to have you on the show. Cai, let me ask you first off, we've seen, I guess, a surge. It's a little early on in the year, but defense stocks, as you look at the defense stocks in the S&P 500 anyhow, they're up almost 7% on the year. Explain that versus just the S&P 500. They're outperforming by about 3%.
Well, I think it's a reversal of last year. They underperformed pretty sharply, and they're more defensive vehicles. They have high cash flow yields, high dividend yields, and so I think that's the big reason they're up.
You know, is it the logic that to me seems reasonable, but I think is flawed, is that as we see military events like those in Libya escalating, that would be good for defense contractors. But is that not necessarily the case?
No, I think that's actually not the case, because I think a big issue is that the U.S. is a major exporter to the region. Raytheon has a proposed arms sale of Patriot missiles to Saudi. Boeing has F-15s, Apache helicopters to Saudi. Lockheed has F-16 sales to Egypt and proposed to Oman and Bahrain. And you have to think that you know, the nations in the area are going to basically have other priorities. For example, Iraq just decided not to buy F-16s, but to use the money to buy food for their people. I think from the U.S. government perspective, they're going to be more anxious to kind of go slow in approving these sales, not knowing, you know, exactly to whom these equipments might ultimately be going.
So we'll be seeing these sales potentially fall through because the countries have bigger priorities, other things that they need to potentially allocate money to, or is it because the U.S. government will prohibit the sales?
Well, I think it's early to say that they would fall through. It's certainly premature to say the U.S. government would veto the sales. But, you know, just this is a very complicated process. In the best of times, these things have delays. We're not in the best of times, so I think at a minimum, you will see some delays. You may see some reconfiguration of the numbers. So, you know, I think there definitely will be some impact on that.
Let's talk about Raytheon for a moment. You have a neutral on this stock. Where do you think it will end the year, and what are the biggest risks to the company going forward?
Well, certainly one is they have this large potential sale to Saudi Arabia, which I think, you know, they hope to get in mid-year. And if that slips to the right, that could start to put some pressures on their numbers for late this year or early next year. But it's a defensive stock, so that if the economy recovers and the market moves back upward, I would expect Raytheon to underperform. If the market struggles and the economy struggles, you know, it may perform in line, could do a little bit better.
Now, Boeing, a different story here, obviously has a large commercial business. You have an outperform on the stock. Yesterday, it saw a nice 3% jump. Tell me how the defense, what is happening in the Middle East, affects that company.
Well, they have this large potential sale to Saudi, but really in perspective, their defense business looks relatively flat. That's what we're looking at the next couple of years. The key is commercial, and there they've got a huge 5-year backlog. So while oil prices are up, and that is a threat to the economy, really the backlog is pretty much in place, and you know, you'd really have to have a sharp slowing in the economy, I think, to derail that expected delivery ramp. It looks like they're doing a little bit better on execution on the 787. So we think there's potential for good, strong earnings gains the next couple of years and good, strong improvement in cash flow per share.
All right, Cai, thanks so much for joining that. Appreciate sort of an early look at how these defense and aerospace companies could be affected by what is happening over in the Middle East. That was Cai von Rumohr, aerospace analyst at Cowen & Company.